Well, the S&P 500 just closed its fifth green day in a row, up over 7%, and we're right into the biggest earnings week of the quarter. What could possibly go wrong? We've got 40% of companies by market cap reporting over the next few days, so mark your calendars. Bonds continue to drop and have become the bellwether for markets. 4.5% for the 10-year and 5% for the 30-year have become the line in the sand, leading to easing on trade policy. Now, we just need JP to play ball too. Our job amongst all this is to identify the best opportunities, both from the perspective of upside potential and the balance of risk and reward. To help us do just that, today we're going to compare the key names we've been following to identify which are showing relative strength. A notable laggard as I was doing this research over the weekend was semiconductors. Does the sector have great long-term potential? Sure. But it hasn't been the case since the fall, and we really need to see that sector catch a bid to drive up the broader market. Aside from that, Europe lost power, Trump wants tax cuts for anyone earning under 200K, and Fartcoin surged 30% over the weekend. You're right, I added that last one because it makes me giggle. But I need to keep you entertained. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you guys all had a great weekend. Before we dive in, if you do find value in the content, if you could like or subscribe, that really does help this get out there to more people. Also, thank you for all the great questions you've been leaving. As of at least a couple hours ago, I think I got caught up on all of them. So if you did leave a question, check back as I went through and answered all of them in detail. So today we're really focusing on the charts that are showing relative strength and weakness to help us determine appropriate position sizing. For context, I'm 70% in 4 assets: Bitcoin, Solana, MicroStrategy, and Tesla. Hood is another 10%. So you can imagine that when I'm talking about charts for swing trading, most of these names are positions that are like 2 to 5% of my overall holdings. This is a bit off topic to relative strength, but I want you all to understand that position size matters, and high conviction in a few select names can really pay off. I generally don't advocate for buying indices if you're actively managing your portfolio, because in something like the S&P 500, you'll get weighed down by the 95% of companies in the index that are underperforming. But before we get into all that, I have a few important bits of news and follow-ups from Friday's video. First, we talked about the Zweig breadth thrust and how that signal generally indicates a 20% rise in assets over the following year. However, I went back to test the last 20 instances of the signal, and the biggest gains only happened when we touched or were already under the 200-week average on the S&P 500. Now, we didn't touch that this time. We bounced just above it. And so when we're above the 200 weekly, that indicates only average returns of 10% over the next year ahead. In my mind, that does point to upside, of course, but it also indicates potential for continued chop over the next 12 months. Also, in more exciting news, Bitcoin game theory continues to play out, with Arizona becoming the first state to pass Bitcoin Strategic Reserve legislation today. Also, MicroStrategy acquired another 15,355 Bitcoin for a whopping $1.42 billion. Remember, there are only 450 Bitcoin on average mined every day, so we are looking at supply crunch starting to kick in. MicroStrategy have now achieved a Bitcoin yield of 13.7% for 2025 and hold a total of 553,555 Bitcoin, approximately 3.69% of the total supply. I'm taking lost coins off the 21 million total in that calculation. In perp trading updates, Jupiter just released an exciting new feature that lets you set multiple targets for take profit and stop loss zones. Until now, you could only set one take profit and stop loss that would close your entire position. So this gives you a lot more control of each of your perp trades. To access this feature, instead of going to the normal jup.ag URL, just go to edge.jup.ag, and you can access these beta features there. Okay, one last correction from last week, because I want to be as accurate as possible with anything I'm saying here. On the All In podcast, Chamath made a claim that potentially as much as 47% of NVIDIA's sales are going into China by unusually large sales numbers going through Cambodia or Laos, and the theory was, oh, they're ordering there and then getting them into China some way. Well, NVIDIA came out with their own statement just saying that these are billing addresses for companies that are domiciled in these countries, and that the actual chips are shipping to other locations. So I can see why NVIDIA would want to correct this, because they don't want to have a perceived concentrated sales risk tied to China. I couldn't find receipts on either end of the argument, So definitely keep your eyes on this, and I will too, and I'll let you know if there are any updates. Okay, so getting into things that could move markets for the week. Firstly, we have earnings to watch. So on Wednesday, we have Microsoft, Meta, and Hood. Those are the key ones I'm watching. Obviously, there are a lot more companies reporting. So if anyone in your portfolio is reporting, please mark that on your own calendar. Thursday, we have Apple, Amazon, and MicroStrategy. And Friday, we have CrowdStrike, and most importantly, FL Foot Locker. No, I'm just kidding. No one cares about Foot Locker. Moving on to Forex Factory, we have a big week for job numbers. On Tuesday is the JOLTS job opening, so that's tomorrow. Wednesday, we have ADP non-farm employment change, advanced GDP, that's another one to watch, employment cost index, and core PCE price index on Wednesday. And then on Thursday morning, unemployment claims, ISM manufacturing. And Friday, average hourly earnings, non-farm employment change, that's a big one, and the unemployment rate. So definitely keep your eyes on those for catalysts that could move markets in either direction. Okay, getting into the meat of our analysis today, relative strength. Not all stocks move in tandem, and while markets may broadly be going up or down, there are always outliers that outperform or underperform the market. So some sectors move cyclically, others seasonally, or others just move on hype or public sentiment, like we saw with the quantum computing rush at the end of last year. That particular one is a great example of a small hype bubble where many names may not break the highs of those blow-off tops for years to come until they mature and deliver on the promised product market fit. For today's example, I'm starting with the S&P 500 as our benchmark to compare all other assets against, and we're looking at two metrics. Where was the stock or indice sitting relative to the start of the Trump election pump on November 4th, 2024, and where's that same name sitting relative to the 90-day tariff pause pump that we just had on April 9th, 2025. I'm picking these two dates as they kicked off our strongest market-wide rallies over the past 6 months. I'm measuring both November 4th and April 9th from the close of the day, and note that these numbers were measured over the weekend, so they don't account for today's market movement on Monday, April 28th. However, I took a quick look and most names are in a similar range. Just Palantir shot up on news of a large new contract with the government. So that one, while it's already impressive, is even more impressive after today's gain. And really quickly, the point of measuring relative strength is just to see, hey, if the overall market has been pumping up and there's a name that's lagging that or is maybe below that big pump of April 9th, that could be showing relative weakness. So maybe that's a name we don't want to be in with as large a position, or maybe we don't want to touch it at all right now. Now, all the names we're covering right now are names that I've been looking at in the analysis over the past few weeks. Now, you'll notice that there are a few names that we've been covering that I'm not looking at in this analysis. That's because they're names that have been in a general downtrend and haven't moved in concert with the broader market. These are kinds of short-term plays where we're just looking at scalping a bounce off the bottom. They're really beat up and we're just looking for a bit of mean reversion, but they aren't charts that I'm comfortable holding for more than just a few weeks to capitalize on a bigger return. So with that background, let's look at the charts. First, we'll start with the S&P 500, and you'll notice I drew these arrows for November 4th and for April 9th so we can see those clearly. But before we get into that, I just want to talk about some potential overhead resistance on the S&P 500 so we can know what to anticipate in the week ahead more broadly. So we still have this gap fill here at 5,572 that we came very close to. So I would anticipate us hitting that, but we also have a lot of resistance coming up in this zone right here. So from, I would say, 5,600 to 5,800, that is our biggest zone where we could anticipate a rejection and a correction. And we also have the 200-day moving average coming in right here. So those are the main things to watch. The NASDAQ, in contrast, has already closed this gap, so there's no more gap fill to the upside for the NASDAQ, so it is showing relative strength compared to the S&P 500. The other thing we saw today was a retest and bounce away from the 50% level, which is an encouraging sign. If we are able to push through this week and reject from somewhere in this zone and come back down, I would really like to see us bounce off this downtrend for support. We also have some gap fills to the downside right here by these two dotted lines. So perhaps we go down here and then rally back up. That would definitely be a stronger setup than the scenario we talked about going down to set another lower low before recovering to the upside. But let's delete those and just look at what we're here, relative strength. So the S&P 500 is our benchmark. And the first zone we're measuring is this pump right here, the April 9th tariff pause pump. And we are up roughly 0.85% on the close today. I'm not going to measure all of these because I have the numbers written down already and I want us to save time. And then if we go to the election day pump here that started after the 4th of November, the S&P 500 is down 2.95%. So up from that tariff pause bump and down overall. Keep that in your mind as we go on to the next charts. If we switch over to Bitcoin, and I'm just starting with Bitcoin because we've been talking about it showing relative strength, you can see that from that April 9th candle right here, we are up 12% on Bitcoin, so quite a bit stronger than the 0.85% on the S&P 500. And instead of being negative from the election pump, we are actually up 40% from that November 4th date. So you can see relative to the S&P 500, Bitcoin is showing a lot of strength. Okay, staying in the cryptoverse, just to compare this sector, we'll look at Solana, another name that I am in. And right here, you can see this is our April 9th peak. And from that point, we are up 20%. So we've actually bounced almost double the bounce of Bitcoin. But if you go back to November right here, we are actually down 6% since the Trump election pump. So we are definitely showing relative weakness in Solana. Yes, we did rally up much higher to this $300 high, but we've had this massive pullback and now are bouncing along with the broader industry and are also getting some tailwinds from the ETF hype. That said, I'm still seeing some signs for some near-term caution, and I'm just doing a little bit more analysis with Solana here because it's a name that I know a lot of you are in. This inverse head and shoulders is, yes, still targeting that $180 price range. If we zoom in, we do have a new potential head and shoulders forming right here that would be targeting right around 132. So this would go along with the thesis we've been discussing of a pullback before an eventual bounce to hit that target. But the notable thing is that we almost printed 3 red days today. And you'll say, well, all these are red. This one was a topping bar. This doesn't count. We had 1 red down bar, 2nd red down bar, and then this right here is now an indecision outside bar. So this doesn't count for our 3-day down rule. However, if this would have printed red, that would have advised caution for the near term ahead of either more downside price action or a lot more sideways chop, and potentially predicting that Solana would not be as strong as Bitcoin. Since that signal did not print, I'm definitely still bullish on Solana, but I want to see it catch up in terms of relative strength, and I'm treading a bit lighter with it, and I'm keeping more assets right now in Bitcoin because it's proven itself since that November timeframe to be the stronger horse. Okay, staying crypto adjacent with proxies, we're just going to look at MicroStrategy, and you can see that MicroStrategy is stronger than both the previous charts we looked at, both the bounce here from April 9th and where we came from right here on November 4th. And the notable thing with MicroStrategy, while Bitcoin was kind of rounding out and bottoming, this had already been running up since September and then got into that blow-off move. So this was showing relative strength even moving into that November timeframe before that big bounce. And our totals on MicroStrategy from the tariff pause pump right here, we are up 25% from that bounce point from the peak of it right there. And then from November 4th, we are up 68%. So you can see, at least in the charts we've looked at so far, this is our strongest performer. Okay, moving over to semiconductors, and we'll start with NVIDIA. And let me make that full screen. So on NVIDIA here, the big thing you'll notice is we are weak on 2 time frames. Here is the tariff pause bounce. We are below that currently. And while this rebound has been strong percentage-wise, it's relatively weak compared to the broader market and compared to tech. And we are way down here from November 4th. So that's telling me that this industry is reacting differently to other sectors to the current administration and their policies. So NVIDIA is down from the April 9th tariff pump 3.75%. And from that November 4th timeframe, we're down 17.5%. So far, this is the worst performer of the last 6 months. And again, I don't want to write it off because maybe these levels are good for you for stacking for a longer time frame hold, but currently it's not showing strength and near-term upside potential compared to some of the other names. If we flip over to TSM in contrast, which is also in the semiconductor space, but TSM is actually above that April 9th tariff bounce right there. So it's up 3.7%, while NVIDIA is down 3.75%. And from this November 4th timeframe here, it's also down, but it's only down 12.8%, while NVIDIA was down that 17.5%. So even within a sector here, if you're rotating between assets within the same sector, I would suggest that it would make sense to have a higher weighting towards TSM because of the relative strength it's showing compared to NVIDIA. Also, it's smaller market cap, so it has more upside potential overall. Remember, when a company is worth $2 or $3 trillion, it is much harder for that asset to double than it is for a company that's worth $100 or $200 million to double. Okay, looking at something different, and we'll go over to Tesla. And if we look at Tesla right here, we are up on both time frames. We're up from the bounce, and actually it's been outperforming the broader indices the last few days. And we're up from November, but we also had a huge run up and a very big correction. So depending on when you measure this, it could be much stronger or weaker. But overall, Tesla is up 5% from the tariff pause bounce and 20% from the Trump election pump. It was up as much, let's just measure this from the Trump election pump. It was up as much as 103%. So we've definitely come off those highs. But the notable thing for Tesla here compared to the S&P 500, and this is very important to note, the S&P 500 was coming down and then set much lower lows on this drop before the tariff pause pump, whereas Tesla had already found its lows and then came back up. And then we had Liberation Day and the rest of the market crashed, but Tesla continued to hold this base here and didn't drop past these previous lows. So that tells us that there is relative strength compared to the broader indices here, and that Tesla is forming a really strong base at this $210 to $220 level. Beyond that, what I'm taking away from this, if we go out to the weekly, you've heard me talk about this underside support line that we've had going all the way back to the COVID lows. And we've had 3 touch points, which makes it a valid trend line. And we said, oh, are we going to find weakness on some more bad news and come in to test that and bounce away? Well, at least in the near term, I'm thinking that's not very likely because of that strong support we've seen and that relative strength compared to how the rest of the indices have reacted. Sure, maybe we'll meet this trend line one day down the road in a year or two from here, depending on where it is. But right now, I'm putting the probabilities on the side of continued strength from Tesla and a bit more of a recovery from this massive pullback. Okay, I'm going to look at one that's totally different, and actually one of the ones that I'm playing as a bounce play, but I'm also putting on here because of its relative strength. So this is Celsius. And you can see it is off massively from its highs right here. So if we're just measuring off this second high down to the low, it went down a whopping 78%. And I got in around here in the low $20 mark. I didn't know this was going to pump or they were going to have good earnings. I just saw that it was massively oversold. We were starting to have a rounding bottom. So I started building a position with an average cost basis of around $22 when I came in and added some more on this island reversal here. All this drop was on concerns from limited distribution and growth potential, and they formed some strategic partnerships to be able to turn that around. So on those earnings and partnership announcements, we had this massive gap up. And as we talk about, gaps usually fill. We didn't fill this one right here, but we did fill this one right here. And when this came back down, I added to my position with more conviction because as this is bottoming, I don't want to deploy everything right away. So I deployed 1/3 in this zone, layering in at bottoms. And then I deployed another third as I was seeing this island reversal forming. And then I deployed the rest of what I wanted to add to my position in this chunk right here. And what's notable is, as tariffs got announced, while the broader market was going down, this kept floating up. And now we've been in this bull flag pattern. So I'm just pointing all this out to show you all the signs of relative strength. And while the numbers from November 4th here and from the 9th aren't massive gains, the broader pattern here is painting a very solid picture for this particular name. So let me just delete some of this as we talk about the returns. So if we look at the 9th, we're actually now below that a little bit, down 2.3%. But from November 4th, we are still up 15% from that point right here. Again, though, this is a chart that you have to assess differently because if you looked at all those other patterns, this is almost moving inversely to everything else that we've looked at so far. So moving over quickly to SMLR Scientific, make this full screen. Again, you can notice a really similar pattern to other charts we've been looking at that pumped after the election, came back down to earth, particularly on tariff news, and now are finding their footing. So if we take the measurements for SMLR, if we're looking at the 9th here, we're up 5% from that tariff pause announcement. And from November 4th here, we are up 30%. So we're a bit middle of the road. This is a Bitcoin adjacent play, but if I'm looking at similar things in the space, I would say MicroStrategy is outperforming and would be the faster horse comparatively. And speaking of fast horses, the last one on my list is Palantir, where I wish I would have gotten in more on these dips. I just have a very small position, but this has been showing such relative strength, and you can just see that bounce away here. And we talked, a week and a half ago about breaking this 50%, and it rocketed away. They had another big contract announced today that's helping them out. So if we're looking at Palantir by the numbers and comparing it, we are up 21% from that tariff pause bounce. Actually, you know what? I'm just going to measure it because I don't want to take the weekend numbers. Let's see where it really is today. We're up 23.15%, and we'll just measure this again from the election day, and a whopping 173%. So you can see how this is the massive winner. And your question might be, well, do I move everything into Palantir now? I still advise caution, as I've been saying like a broken record. Don't chase pumps, wait for a pullback in a lower high to set. Your risk goes up exponentially as things are on a run. And you have to go counter to psychology. Most new traders, they'll see something running and they're like, that's the thing I have to get into. When really you want to be building positions way further down so you can have more upside. Here, your upside is limited because I don't think this is going to necessarily double very quickly from 115. I would love to stand corrected on that. But doubling from down here at $30 to $60 is much easier to accomplish. So keep that in mind. Also, if there is a pullback, you can see how this has been moving violently. So maybe a pullback would bring you down to the 50% level, and then maybe we bounce away, who knows. But if you enter up here, you're risking much more capital to the downside, and entries on pullbacks or at very low levels in the market are actually much safer, even though they don't feel safer emotionally. So what can we take away from all this? Well, clearly Bitcoin, MicroStrategy, Hood, and Palantir are showing the most strength and the biggest gains relative to the indices. So what does that mean for semiconductors, though, with the relative weakness we saw there? Well, I maintain that demand is high, and that'll only increase over the coming years. However, it does mean that it may not be the season for semiconductors to outperform right now. And how does that impact my investing? Because I can only tell you what I'm doing with my portfolio. I can't tell you what to do with your assets. Well, it means that my allocations to that sector are smaller. They're only about 5% between TSM and NVIDIA. And I'm focusing on the sectors with more tailwinds, crypto and certain tech disruptive plays. So remember that not everything runs at the same time. So my assets that I'm in right now that have strong tailwinds, yes, I'm letting them ride, but once they start looking toppy, that's my signal that it's time to move into something that hasn't moved as aggressively yet, but has great potential and strong fundamentals. So maybe in a few months from now, that is semiconductors. Once some of this trade stuff has settled, perhaps it's moving more into other disruptive tech or acquiring more shares of Tesla. I'm always looking to swap the strong things that have gotten to the top into something with great potential that hasn't run yet. And you're trying to acquire as many shares as possible of that asset that hasn't run, so then you can ride that up on the next leg. You don't always have to move into cash. Everything is a pair, so think about swapping from one asset to another to grow your bags and grow your portfolio. The last thing I'll say on this kind of relative strength analysis is that it's not the end-all and be-all of TA. You're just using it to identify stocks with current momentum, but you have to use your traditional technical analysis to identify when to get in and when to get out exactly of those names. Additionally, you're using fundamental analysis in the background to identify which companies are the right ones to invest in that have good long-term potential and have the right narrative and leadership. However, in the current environment, I am relying a bit more on this kind of relative strength analysis. As I've mentioned in past videos, my strategy has changed this year from being more of a longer term investor, or I guess medium term investor holding assets for a couple years at a time, to being in more of a trading mindset. I know we're getting into late cycle. We have new leadership that can lead to more volatility, and we're seeing that play out. So this kind of relative strength analysis helps me identify which charts have the most strength and momentum behind them to maximize on those swings and grow my portfolio in the year ahead. Well, I hope you guys found that to be helpful, just as another little tool you can use as you're comparing assets. You're not sure maybe which one to deploy into or which one to give a higher weighting. Hopefully this can help you identify relative strength amongst a multitude of charts. For Friday's video, I'm unfortunately traveling this Friday, so the end of week wrap up is going to come on Saturday this week. My apologies. That said, I do have a fun interview that I'm really excited to share with you guys that I'm going to be dropping on Wednesday. So I'll just leave you with that little teaser for now, and I'll see you then. Bye for now.